Hello, I'm Nathan Moss, Chair of the Wesleyan Group. I'm delighted to welcome you to the 2024 Wesleyan Annual General Meeting. Thank you for joining us today. Before we get to the formal voting, we'd like to share some updates on Wesleyan's performance in 2023. First, I'll provide an overview of some of last year's key developments before handing over to our Group Chief Executive, Mario Mazzocchi, who will share more on Wesleyan's strategic progress. This will be followed by an analysis of our financial performance from Nathan Beckett, our Chief Financial Officer, and an update on financial markets from Martin Lawrence, Director of Investments. If you cast your mind back to 2023, you'll remember it was another challenging year, both at home and abroad. As war continued in Ukraine, geopolitical uncertainty was further compounded by new conflict in the Middle East. Our thoughts are with everyone impacted by these and all conflicts throughout the world. Global events such as these inevitably impact domestic economies. In the UK, economic growth flatlined, and we ended the year in a technical recession. While there was a gradual fall in inflation over the year, interest rates hit a 15-year high. There were winners and losers as a result. Cash savers rushed to take advantage of higher interest rates, while mortgage holders came under increasing pressure. Against this backdrop of difficult trading conditions, Wesleyan has made steady progress, achieving a more positive set of financial results and making good headway in our strategy to deliver sustainable growth for the group. Operating profit grew, benefiting from new income streams, more efficient ways of working, and a strong focus on cost management. Despite volatility in financial markets, our investment funds performed well against their sector, and assets under management grew to 7.6 billion from 7.2 billion. Based on these results, I'm pleased to confirm that we're in a position to pay a mutual bonus this year. This is a discretionary bonus which allows us to share business profits with members when conditions allow, much like a dividend. Earlier this year, we distributed £10 million to Wesleyan policyholders in our With Profits Open Fund, equating to 0.25% of a policy value. We were also pleased to contribute £2.7 million to provide members with a discount on personal and commercial insurance policies, and to extend our member rewards programme. Our ability to grow in a period of ongoing economic uncertainty, while also delivering enhanced benefits for members, is a strong indicator our strategy is working. However, we have more to do to ensure Wesleyan is well placed to thrive in the years ahead. And therefore, we've entered into a new 10-year partnership with Diligenta, a UK-based subsidiary of Tata Consulting Services. Diligenta is a leading provider of third-party administration services for the life and pensions industry in the UK. They will bring their extensive industry experience and innovation to Wesleyan as they deliver key operational and IT services on our behalf. This will allow us to make a step change in customer experience, drive greater member value, and strengthen our ability to compete in the UK's fast-moving and increasingly technology-driven industry. This new way of working is a major milestone in our journey to become a modern and sustainable mutual. We expect it will take around 18 months to transition to the new model, and we will continue to support all of our people through the process of significant change. A key focus is ensuring Wesleyan meets the requirements of the new Consumer Duty regulations. My board colleague Rita Bajaj, acting as Consumer Duty champion, enables the board to have full oversight of the work across the group to ensure we are ready to meet the next deadline on the 31st of July. We are fully committed to the aims of the duty, which has good customer outcomes at its heart. This thinking is central to Wesleyan's approach and the basis of our transformation programme. As we grow, we'll ensure sustainability remains at the core of our business. I'm pleased with the progress we've been making in this area. We met our target to be operationally carbon neutral in 2023. This was achieved through a 50% reduction in our carbon footprint since 2019 and a purchase of carbon credits to responsibly offset the remainder. Our aim is to be net carbon zero by 2050 at the latest, including our investments portfolio, and we will be setting measurable milestones along the way to ensure we get there. We will continue to ensure the money we invest on your behalf aligns to our sustainable investing principles, which apply to all our direct managed funds, ensuring it has positive impact, reduces harm, and drives change. The Wesleyan Foundation continues to make a difference over the year, supporting causes that are important to our members and the professions and communities we serve. The Foundation has donated more than £5.9 million since its inception in 2017. And last year, we launched 3 new grants covering climate action, equality, and well-being for teachers, doctors, and dentists. We are truly committed to becoming a more diverse and inclusive business. We recognise diversity of thought leads to better decision-making and gives us a greater understanding of customer needs. We've been proactively building a more diverse leadership team, and I'm pleased that 41% of the senior team is now female, ahead of our target of 35%. We have further to go, however, to create a more ethnically diverse team, with 10% of leaders currently from ethnic backgrounds, against a target of 16%. We are working to achieve a greater representation through internal talent management programs and recruitment initiatives. There have been some changes to the board since our last AGM. Andrew Needham retired after 9 years as Wesleyan Non-Executive Director and Audit Committee Chair. He goes with our sincere thanks for his committed contribution to the group. Gary Dixon joined the board last August, bringing with him over 30 years' experience in financial services and regulation. Gary replaces Andrew as chair of the Audit Committee. Our former Chief Financial Officer, Gillian Cass, left Wesleyan at the end of March after 3.5 years with the business. We offer her our heartfelt thanks for all she achieved in contributing to Wesleyan's success in this time. Nathan Beckett moved into the role of Chief Financial Officer and joined the board on the 1st of April. He has been with Wesleyan since 2008 and has undertaken a number of senior roles, more recently as Managing Director of Dental, General Insurance and Direct. He brings excellent insight and experience to the board, and I'm looking forward to working with him more closely. We also appointed David Stewart, Wesleyan's Chief Operating Officer, to the board in May. David has been successfully leading Wesleyan's transformation programme since 2019. And as we enter the next stage of our strategy, it is critical we have full visibility of progress at the board level. We also further strengthened our Members Advisory Board in 2023 to make it ever more reflective of the different life and career stages of our customers. This board is made up of eminent professionals from the medical, dental and teaching professions, and they play a key role in shaping our understanding of the changing personal and professional needs of our customers. We are really grateful for their support. 2024 is shaping up to be another challenging year, with the UK general election next month against a backdrop of continuing global uncertainty and a volatile economic environment. However, with our clear strategy, strong capital base, and gradually improving outlook for the UK economy, we can be cautiously optimistic, remaining resilient and responsive to any changes that might impact our business and the professions we proudly serve. Finally, I would like to thank all our wonderful members and customers for their ongoing support, and also my Wesleyan colleagues who work so hard and care so much about delivering brighter financial futures for our professional customers. I'll now hand over to Mario Mazzocchi, our Group Chief Executive. Thank you.
Thank you, Nathan. And first thing to say is 2023 was yet again another complex year. It was a complex year because of the geopolitical instability, which of course impacted and affected the financial markets. And within that backdrop, I think it's particularly important to recognize and acknowledge that it was a difficult year for our segments, of course, as well, and the role that Wesleyan played in supporting our customers and our members. And I'm incredibly proud to say that, for example, our With Profit Fund returned almost 10% to our members. So it's a tangible impact of how Wesleyan has supported the life of our customers. Overall, as a business, we have been doing well. So in 2023, we increased our operating profit by 71% versus 2022. So in spite of the difficult economic conditions, we continue to support our members and deliver tangible value, and we continue to become more financially sustainable as a business. So why is that? Because first, the strategy is working, and secondly, the execution of that strategy is being delivered. Just to give you an example, we certainly very recently announced an important transformative partnership, the one with TCS Dirigenta, that is aimed at outsourcing the majority of IT and operations. That is critical because the TCS Dirigenta has the scale that we don't have. They can continue to invest in technology. If we think about, for example, the impact of artificial intelligence will continue to grow. It's particularly important that we continue to partner with companies that have the scale that we don't have. So that is critical and a fundamental part of our transformation programs. Horizon is a project I mentioned a few times before. Its aim was to create a better customer experience. All in 2023, we made 160 improvements to the customer experience. That is true to our values, our mission of creating better customer experience and, of course, making the business more financially viable. So transformation is working, and it's working in the intended way. There are also a lot of plans to diversify the delivery of our With Profit Fund, for example. So about 2 years ago, we announced a partnership with a company called Novia, followed by another company called Nucleus last year, and now the launch this year of a third platform called Aberdeen. So a lot of plans, a lot of transformation, working in the intended way, helping us support customers even better, and of course, continuing to make the business more valuable. Within that, of course, the impact on colleagues is great every time you have transformation. So it's absolutely critical that we continue to invest in colleagues, being a mutual, and we are absolutely committed to continue to be a mutual, doing the right thing and do it in the right way. There's a lot of changes, as I said, in operations and IT. We will continue to support our colleagues in the best possible way. We're also trying to become a more diverse organization. There's a lot of activity that we're doing to make sure that we reflect one of the first of all, a customer base, and of course, one of the most diverse organizations in the world is the NHS. We want to be better at reflecting our customer base, and of course, the city where our head office is, Birmingham, is one of the most diverse cities. So overall, optimistic about the future. I think we are in great shape to now capitalize on the growth opportunities, hopefully coming from better economic conditions in the future. And therefore, I just want to say a big thank you to all of our members, all of our colleagues actually who made that possible. And I'm looking forward actually to an even more prosperous future for us. With that, I just want to pass it over to Nathan Beckett, the Chief Financial Officer, who will go into a bit more details around the 2023 financial performance. And from me, thanks again.
Hello, I'm Nathan Beckett, Chief Financial Officer. I'm delighted to be here today to give my first update to members on Wesleyan's financial performance. As you've already heard, external events in 2023 created another uncertain operating environment. Yet despite this, Wesleyan has continued to make steady progress. We have increased operating profit, retained our capital strength, and as you've just heard from Mario, continue to make good progress with our strategic plans. This progress has had a positive impact on our financial performance, improving the long-term sustainability of the business, as well as making it easier for customers to do business with us. As a result, we were pleased to see another year of profitable growth, with group operating profit increasing from 7.2 million to 12.3 million. This growth was supported by new income streams as we continue to increase availability of our With Profits Fund via third-party investment platforms, as well as a stringent focus on effectively managing our cost base. This is core to our strategy and has been key to helping us navigate our way through a challenging period of high inflation that drove up business expenses. Volatility in the financial markets, alongside continued cost of living pressures, meant we, in common with others in the industry, saw customers moving away from investment products in favour of cash savings, largely due to the improved rates of interest on cash accounts. This led to a fall in society premium income compared to the previous year. However, a late market rally towards the end of the year resulted in a better than expected performance for many of our investment funds, which performed well overall compared to their sector benchmarks. This perhaps proves the truth of the adage that time in the market beats timing the market. As you've already heard, our flagship With Profits fund delivered a gross return of 9.9% last year. As With Profits is a long-term investment, it is also worth noting that the cumulative 10-year performance on the fund was 84%. We also saw a growth in our assets under management to 7.6 billion from 7.2 billion the year before. As a mutual, we can take a long-term view, and even in times of market volatility, such as that which we saw last year, we strongly believe that equities and property give the best potential for competitive returns for policyholders over the longer term. One of the main reasons we're able to support a higher than average exposure to these asset classes is because we're a financially strong organisation, and this remains integral to our strategy. It means we can remain resilient and well placed to deliver the best outcomes for our members and customers. One measure of financial strength is our solvency ratio, which stood at 322% at the year end, a much higher ratio than that required by the regulator. I'd now like to give you a quick overview of the performance of our subsidiary company, Practice Plan Group. Practice Plan and its sister company, DPAS, form the dental membership arm of our business, and together are the largest providers of Practice-branded dental membership plans in the UK. 2023 marked Practice Plan's 10th anniversary as part of the Wesleyan Group, and there was good reason to celebrate as it grew the number of patients on dental plans to a record level. This contributed 7.6 million operating profit over the year as part of the group result. To conclude, we are confident that the year-on-year growth delivered across the group in 2023 proves that our strategy is working, and we're delivering better outcomes for members and customers as we build a more sustainable mutual. It was encouraging to hear the news last month that the UK is now emerging from recession. However, 2024 is still shaping up to be another difficult year. If inflation continues to fall as expected, we can expect to see a cut in interest rates in the months ahead, but economic growth still remains weak, and challenging economic and geopolitical conditions create ongoing uncertainty. With that said, we are, however, optimistic that Wesleyan will continue to stand strong and support its customers through challenging times. Our capital strength will enable us to robustly withstand ongoing turbulent conditions, and we'll also start to see more benefits of our transformation work showing through in our financial results in the years ahead. I will now hand over to Martin Lawrence, Director of Investments, for an update on the financial markets. Thank you.
Hello, I'm going to spend the next few minutes talking to you about global markets, how they performed last year, and what this has meant for the investment funds we manage. During 2023, inflation and interest rates certainly dominated the financial headlines. At the start of the year, inflation was sitting at an uncomfortable 10.5%, but by December it had fallen considerably to 4%, inching closer to the 2% target set for the Bank of England. By contrast, having started the year at 3.5%, the bank had raised UK interest rates to 5.25% by August in order to combat that rising inflation. This hurt bond markets more than stock markets, and UK bond prices continued to drift downwards right up until the end of October, as the Bank of England remained adamant that in order to get inflation under control, interest rates would have to stay higher for longer, with the proviso that cuts could be on the horizon in 2024 if justified by the economic data. Helpfully, in the closing months of 2023, the outlook for inflation did improve, and, as a result, investment markets became excited at the prospect of lower future interest rates, resulting in a strong year-end rally for global investment markets. Welcome news for patient investors everywhere, particularly those invested in lower risk funds, which are more heavily weighted in bonds and had been hurt by the combination of high inflation and high interest rates. If we delve into some of the key events of the year, China started the year well, finally re-emerging from COVID, only to falter later, resulting in its stock market being one of the worst performers of the year. Over in the States, US technology stocks enjoyed their time in the limelight. But it wasn't all good news for the US. The country saw two high-profile banks collapse in 2023, Silicon Valley Bank and Signature Bank. Over in Europe, Credit Suisse was also teetering on the brink of collapse, only to be saved by rival bank UBS. Meanwhile, UK equities also started the year on a promising note, but by mid-year found themselves lagging behind their overseas peers, partly affected by the faltering Chinese economy and partly due to a lack of technology exposure which had powered the US. Despite this, the late-year rally I mentioned earlier resulted in our funds producing positive investment returns overall in 2023. For example, our lower risk unit trust produced a gross return, before charges, of 8%. On to 2024. It was pleasing to see the feel-good factor in equity markets generally carry through to the new year. However, due to stickier inflation and elevated interest rates still being prevalent in many countries, global bonds have been left behind. Share prices have risen as previous fears of deep recessions have proven unfounded. We are certainly pleased to see new record highs being recorded for the UK stock market, something that had previously been seen in other countries. This change in sentiment is good news for the UK holdings within our funds and is allowing us, where suitable, to harvest those gains and recycle the proceeds into overseas markets. We remain very comfortable with our UK equity holdings, but continuing to diversify more globally should help us to deliver even better longer-term returns for our customers in the years ahead.
Thank you to all our speakers. It's great to see the progress we've made during 2023. Now, before we start the formal voting part of our meeting, I would like to invite questions from our members that they may have of our board. And I'm going to ask Wesleyan's Chief of Staff, Nathan Wallace, to come on screen to facilitate the questions. Nathan.
Thank you, Nathan. Good afternoon to our members. If you have any questions for our board today, please click Q&A at the top of your screen. If you drop a question into there, I should be able to see it, and we'll get through as many as we can in the time allotted today. While they filter through to me, I should confirm that for any questions we're unable to answer today, we'll publish full responses after the event on our AGM website. So Nathan, I'll just get the questions up now. The first one that came in advance from a member was, having spent millions on the IT infrastructure, how much has been wasted given the decision to outsource to the Tata subsidiary and the use of their platform?
Well, thank you for that direct question and challenge. I'll ask Mario Mazzocchi, our CEO, to say a few words in a moment. But I did want to reassure you and all members that taking a decision to outsource to Diligenta is a decision by the board that's not taken lightly. We have a detailed consideration of all the implications of such a move and such a deal. And we've particularly looked at the financial implications, both for the business now and into the future, and satisfied ourselves that there's a strong business case for the deal that takes account not only of the membership, but all stakeholders, customers, people working for this business, and of course our regulators. And we believe that this investment deal is not only good for now, but for the future, and it builds on our transformation work that we've been doing. Perhaps I could ask Mario to amplify on that.
Thank you, Nathan, and indeed a very good question. So the first thing to say, as I was saying in my introduction, investment in technology is going to be a constant of the future. So if we think about, and we always use the example of artificial intelligence, the world is changing dramatically, and therefore investment in technology is more important than ever, and of course more expensive than ever. So this is why actually the relationship with Diligenta is particularly important, because they have a scale that we don't have. And in a world where we need to invest in technology more than ever, it's important to partner with someone with scale. To the heart of your question, have we wasted the money we spent to date? The answer is no. Because clearly it will take time to complete the Diligenta transition. So it will be another 18 months of technology, and the technology we need to rely on is the current one. So the fact that we've invested in technology is critical, because we want to continue to offer the right level of customer service as we get closer to the transition to Diligenta. And then, of course, technology is much broader than the part we are going to outsource to Diligenta. So we have CRM, investment in cyber, investment in finance, investment in HR. All of it will continue, of course, to be fully maximized and leveraged by the investment we've done to date. So great question, but no wastage.
Okay, thank you, Mario. Back with you, Nathan, for any other questions.
Thank you, Nathan. Can you explain how your strategy has made the business more sustainable?
I think that one is for Mario, although you may wish to bring in Nathan Beckett as well on that one, Mario.
Yeah, great idea. I'll bring Nathan in a second. I think sustainability is made of two different components. Nathan, you were mentioning, of course, quite a lot about the environmental sustainability, the great progress we've been making, absolutely more to do, the commitment by 2050 to get to net zero. So that is absolutely critical. It's part of our values, and we're very committed to sustainability from an environment perspective. There is also another element, which is the financial sustainability, which is something that we refer to a lot, and I made a couple of points during my intervention earlier on. Financial sustainability is fundamental if we continue in order to continue to support our customers and prosper as a business. And financial sustainability has been very much at the heart of the strategy we have been deploying over the last 4 or 5 years. So if we think about the divestment from non-core business, so the sale of the bank, the diversification I was referring to earlier about the distribution channels being much more broader now, partnerships with Aberdeen, Novia, Nucleus in terms of our with-profit fund, the work we've done in terms of improving customer service and at the same time improving our cost position, all of that is absolutely critical. And it's very much at the heart of making the business sustainable financially. So 2 different components of sustainability, but both of them incredibly important. Nathan, do you want to say a few words about financial strength, which of course is at the heart of financial sustainability itself?
I will do. Thank you, Mario. So I think firstly, just to reinforce what Mario has just shared, it's really important to kind of emphasise that maintaining our financial strength is clearly going to be a key part of us remaining to be a sustainable business. So in short, being financially strong does mean that we can pursue the transformation strategy that Mario has just described, and it is what is going to enable us to build a more stronger, more modern, more sustainable mutual, that will benefit both future and obviously our existing sort of members. You may have seen within my earlier presentation, our solvency ratio at the end of 2023 was 322%, which does continue to remain higher than that required by the regulator. So I think in summary, remaining financially strong, ultimately means, we can make decisions now that are right for the future, not just expedient for today, all in support of becoming a more sustainable business.
Okay, thank you, Nathan. Thank you, Mario. Back with Nathan. Well, do we have any more questions?
We do. We have a couple at the moment. Next one would be, Mario mentioned 160 improvements in his speech. Can you share a few examples with us?
Well, given what we were talking about here, I think it may be a good thing to ask David Stewart, our COO, to come in and talk about that. David, you were very much involved in the big programme of work that Mario referred to there.
Yeah, no, thank you, Nathan. Happy to. So over the last 2 years, we've run an internal improvement programme, and it's been focused on a wide range of initiatives, as the question said, 160, to enhance the experience for our customers, to improve our efficiency, to reduce our costs, but also to reduce complexity for our colleagues. And let me just give you 2 or 3 examples. First one, our customer operations team. We've rolled out an improved process that helps settle bereaved customers' claims 10 times faster on average than we were able to before. We've launched a new complaints system, and that gives us much speedier resolution for our customers and also helps us identify the right longer-term remedial action for customers. And then in our dental business, so Practice Plan Group, we've introduced a new customer relationship management system, and that streamlines our operations, it improves customer engagement, and it also helps with our data accuracy. So those are just 3 examples, but overall, we're really pleased with the progress that our programme has helped us make as a business. And it's also helped us build capabilities amongst our colleagues and across our teams, because many of the initiatives have been created, overseen and delivered by those same colleagues. So they've learnt new skills in the process.
Thank you, David. And of course, from a board perspective, this gives us confidence, seeing all the achievements with this programme of work that's been done and the implementation and improvements that have been made, and that we can invest further in transformation, such as the partnership with Diligenta. So thank you. Back with Nathan Wallace. Anything else, any more questions to take today?
Yes, Nathan, we've got one more. This may be one for Nathan Beckett with his old and new hats on, but the member asks, do I get a discount on Practice Plan if I'm a member of Wesleyan?
You get a discount on Practice Plan if you're a member of Wesleyan. But, well, I don't know the answer to that, so I'm hoping Nathan Beckett does. So let's bring him in.
Thank you, Nathan. So in short, unfortunately, the answer is no. If you're a patient, you don't get a discount. However, what I would say is just a reminder to members of the member benefits that they are entitled to. So there are general insurance discounts if you're a member, and also we do have a separate programme for member rewards as well. So unfortunately, no for Practice Plan, but we do have other benefits that members can avail themselves of.
It may be something for the future we should take on board, see what the popularity of that is and what the merits of it are. But for now, I'm afraid we don't offer that particular discount. Okay, thank you, Nathan. I'll just ask Nathan Wallace once again, are there any more questions that we have?
No, that's it now. Thank you very much, Nathan.
Okay, thank you, Nathan, for facilitating, and thanks to all the speakers for their contributions today. Just a reminder at this point, if you do have any further questions as a result of the AGM, you can email us at agm@wesleyan.co.uk. Now, I'm going to move to the formal resolutions that are before us for business today. For those of you who've decided to cast your votes today, please select the voting tab at the top of your screen where you can see all the resolutions. I will read each one out in turn, which will enable you to scroll down and cast your votes as we go through each resolution. You'll be able to see the full details of all the votes received for each resolution, including those received in advance, under the Results tab once the voting has closed. And results will also be posted to the Society's website after today's meeting. Our first resolution proposes that the annual report and accounts for the year ended 31st of December 2023 be received. Please vote now. Thank you. Since the last annual general meeting, Nathan Beckett has been appointed a director of the Society, and confirmation of his election by members of the Society is required. Please vote now. Thank you. Gary Dixon has also been appointed as a director of the Society since the last annual general meeting, and confirmation of his election by members of the Society is required. Please vote now. Under the Society's rules, at each annual general meeting, all of the directors retire and seek re-election. Following a performance evaluation, the board is satisfied that each of the directors is performing effectively with commitment to their role. You can now vote to re-elect each of the directors in turn. You should see options to re-elect the following directors: Nathan Moss, Rita Bajaj, Ian McCaig, Philip Moore, Harpreet Sood, Anne Torrey, Linda Wilding, and Mario Mazzocchi. Please vote now. Thank you. Resolution 4 proposes that Ernst & Young LLP be reappointed as auditors of the Society to hold office until the next annual general meeting at which accounts are laid before the Society, and that the remuneration of the auditors be fixed by the directors. Please vote now. Resolution 5 is an advisory vote seeking approval for the Executive Director's remuneration policy for 2024. Please vote now. Thank you. The final resolution is an advisory vote seeking approval for the annual report on remuneration as shown on pages 82 to 88 of the annual report. I will allow a short pause so you can vote on this resolution and finalise any remaining votes before the voting officially closes. Thank you. Voting has now closed. And I can confirm, together with the votes received before the meeting, all resolutions have been passed. Results will appear shortly under the Results tab at the top of your screen. Full details will also be published on our website after the meeting. Thanks to all our members for taking time to vote in this year's annual general meeting. I'm pleased to confirm that Society will donate £5 to NHS Charities Together for each member who voted. They work with and provide funding for over 230 NHS charities across the UK, supporting hospitals, mental health, community and ambulance trusts. By leading national fundraising campaigns and supporting NHS charities in their work, they help the NHS to go above and beyond what would normally be possible and ensure that everyone gets better health care. We anticipate a total donation of over £18,000, which is terrific. Well done and thank you. We also continue to proactively seek opportunities to be a positive force for change around sustainability. Once again, we made our annual report available on our website rather than sending it out as paper to everyone. This meant we stopped printing over 1 million sheets of paper, therefore saving over 100 trees. If you're able to support our drive towards carbon neutrality and are happy to move to electronic papers next year, then please email us at agm@wesleyan.co.uk. Finally, we're always seeking opportunities to improve our AGM, and you'll see a link on the left-hand side of your screen, which will take you to a short survey. Please complete this if you're able. Your opinion does matter to us. This now concludes the annual general meeting. Thank you for your attendance and ongoing support for Wesleyan.